Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-host. We got a full house today, boys, and everybody's staying the entire show today, right?
Amen.
Yep. Dwight, you're in your seat.
Yep.
Aaron Clark's in your. I'm a happy man. Dad's happy today. Dad is happy today.
Yep.
Dwight Millard, how are you, my friend?
Doing fantastic, John. Good to be around. Good to be here with you guys. And
amen. Yeah. Amen to that. Amen. Aaron Clark, Edgerly, how are you, my friend?
I'm doing great. Yeah. Enjoying the wonderful windy day and the crazy market and everybody calling and freaking out about everything.
Exactly. Welcome to my world. That's for sure. Well, I'd love to get some take from you on that, Aaron, from the real estate standpoint, as far as what you're hearing from your clients. Same with you, Dwight, and so on and so forth. But welcome everybody. What a wild ride again today. It was a day like yesterday, but not quite as abrupt as yesterday, but it had its moments, to say the very least. We had ups and downs, and majority of it was up, but again, it was very substantial gains after the open this morning. And we continued until getting close to the closing bell at 1:00, and then things sold off. So I want to give you the details behind it. But, the boys and I were joking before the show started, what a difference a week makes, right? When you guys were sitting on this show last week, we were talking, $90 oil. We were talking close to $100 oil was the projections. Obviously, we hit that over the weekend. We hit $120 a barrel oil. And, now here's where we sit at $83.88. $83.88. Just today alone, down $10.88 on top of the loss that we experienced yesterday. Absolute. I have never seen anything in my 36-year career. I've never seen anything like this, where oil prices trade like a stock, like a NASDAQ stock, like a high-tech stock. It's just absolutely crazy what is going on. This market, of course, is focusing on one thing and one thing only. It's oil, but it's really more importantly than that, the president is now in control of global oil prices. I mean, he really is, just based upon his comments as to what he said yesterday and some of the comments that came out today that I'll share with you. I mean, let's just kind of start things. But before I do that, let me tell you what we're going to be really getting down to as far as with the guys. Last week we spent, I think, both shows talking about, Tuesday was really just about the market because it was such a crazy day. And then Thursday, we discussed again how oil prices can influence what's going on in the housing market, as well as what's going on in the mortgage rates and so on and so forth. But now what we need to focus on, because, that was yesterday, that was last week, that was like an eternity ago. What we need to focus on now is, will falling oil prices bring something to Dwight's ears that puts a big smile on that man's face? Interest rate cuts, and then a smile on Mr. Clark's face, which is a housing boom. Before I get to what happened today, Dwight, I'm going to ask you this question, and Aaron, I'm going to ask you the exact same one. Dwight, you've been doing this a long time, 40 years. Aaron, north of 20 years. Have either of you, and I'll start with you, Dwight, have you ever seen your mortgage rates influenced by oil in all of your career? No, didn't think so.
Not like this. Not like, I mean, this is unprecedented. We've said that word so many times in the last 5 years, but this is kind of crazy, John. This is, I mean, as oil goes, so do the rates, right? So,
Right.
Yeah.
Aaron, same question to you. Have you ever seen oil influence housing prices?
I mean, oil
housing markets?
Prices per barrel, no, but on a more micro level of, the influx at the pumps we've talked about this many times. People use what's right in front of them as indicators as to whether or not things are going good or they're not going good. And so I think from that perspective, I think when people complain about gas prices, they start to think more about their finances than when they're at their average norm.
Right.
But no, not
absolutely.
like this. This is crazy. I was reading an article yesterday that said this is the largest swing in barrel prices ever in the history ever. So I was pretty shocked by that.
They started tracking the oil futures back in early 80s, and it's never been this way before. I mentioned that stat on the show on Friday. Yeah, that's pretty historic.
Yeah.
Again, oil trading like a tech stock does. I mean, just big moves, big moves. But we're going to enjoy where we are right now. Like I said, right around this $83 mark, right? This is almost back down to our normal levels, right? We've been spending, between mid 70s to low 80s for years now, other than a few, outlying type of an event. But that's kind of the norm. So to think about that for a second, that we've got a war going on, we've got still the Strait of Hormuz essentially locked down. One ship got out today, and I'm going to tell you some of the headlines that really drove this market related to the Strait of Hormuz today. But the bottom line, this 22% of the global trade of oil, it's still not flowing there. I was talking with a client this morning, and he said, yeah, you go on YouTube, and there's a lot of non-mainstream media coverage out of China. And he was telling me that they're showing lines, miles long of people trying to get gas in China, right? Because China imports 90% of their oil from Iran.
Yeah, we were talking about that on Tuesday, about the impact for their market.
That's right. That's right. Exactly. And of course, it's only got worse. Over the weekend, they told all their oil refiners, no more exporting anything, keep everything in-house. And
yeah.
And now, we're hearing these. Yeah, I know. Right. Exactly. So again, a global situation. But let's go back to, for those of you that maybe didn't follow things or you didn't catch the show yesterday, it really started this turnaround when oil really bottomed, and then really the stock market bottomed, at least interim, was related to yesterday. So it started with the president having a phone call with a CBS News reporter. And he, basically said, and, this wasn't much of a surprise, that look at this conflict with Iran is quickly approaching a resolution. He's, essentially saying, look, they have no Navy, they have no Air Force, they have no nothing. This thing is way ahead of my 4 to 5 week time period of getting it over with. And the street took it as, and the world took it as, okay, this thing's just about done. But what really drove this market and these oil prices yesterday, and then I'll bring you forward to what happened today, was when the president said, in regards to the Strait of Hormuz, he goes, yeah, I'm thinking of taking it over. And I did not read anywhere that anyone's saying, wait a minute here, you can't do that. No matter what you think you can do, you can't do that. It can't be taken over. Now, can you control the vessels going in and out? Well, maybe. And that brings me to today. So things were really recovering nicely. All of a sudden, this news report from the Secretary of Energy, he posts on X, of all places, he posts on X that the U.S. Navy escorted a ship, an oil refinery ship, oil tanker, through the Strait of Hormuz. No problems. Man, oil prices tumbled. We were down like 15%. Stock market rallied almost 400 points. Like, okay, this is what the president was talking about. About an hour later, Carolyn Leavitt, the White House spokesperson, she comes out and she goes, no, didn't happen. The U.S. Navy has not escorted any ships whatsoever today out of the Strait of Hormuz. So all of a sudden, oil prices start to rise and the stock market went negative. We just wiped out all of the gains. That's exactly, what it was.
The power of the words.
Yeah. Yep. So then, the power of the words. So then later, CNBC reported that that claim, while separately reporting that a Ghana flagged tanker had successfully transferred the waterway, transited the waterway. So back to the CBS reporter. Her name is, she's a superstar now. Everyone's like, wow, how'd you get this scoop? How'd you get this phone call from the president? But her name is, again, Jennifer Jacobs, CBS reporter. She reported on X today that U.S. intelligence had observed Iran and they may be preparing to place naval mines in the shipping lanes of the strait using smaller vessels capable of carrying mines. CNN later corroborated the report. Trump immediately came out and said, if they indeed do anything like that, he had all kinds of rhetoric saying basically it's going to be the biggest mistake of your life. So then once that happened, then not long later, the White House said, or actually Trump said in a True Social post, essentially found the U.S. Armed Forces found, I think it was 9 mine lane vessels, and they're now at the bottom of the ocean. That, again, is another thing that everybody is talking about there. So it's like I was telling my wife earlier today, I'm like, I've never in my career ever seen something like this where a market that just is driven every single heartbeat by the words of the president, by oil prices. Those are the two factors. And it's, it makes it very difficult. A lot of investors are getting fatigued, guys. They're getting real fatigued from this.
Yeah, John, I'm surprised they don't just park those 2 aircraft carriers as bouncers. You mess with us, you're going to, Yeah. I'm just surprised there's not more presence. And maybe there is. I only get what I can see on it. But the intelligence on it, but it would calm all this anxiety, global anxiety going on if you could at least start to see, like you said, even one ship going through made all the difference. And no, it didn't, so.
Yes, exactly. Exactly. Yeah, Trump is obviously, he knows the power of the jaw, as the saying goes, right? This market listens to every single word that he says, whether, you want to believe it or not, it does. And all he would need to do, exactly to your point, Dwight, and that's what many oil analysts are saying, the minute they start to see more than one ship going through the strait, you're going to see these oil prices. I don't know where we're going to go. $60 a barrel oil now. I mean, it was easy to go, hey, yeah, when we're at 100 or low 100s, it's easy to say, yeah, we're going to get back to 80 or 90. But now that we're back to, again, $83, right around there, where are we going to go next? Low 70s, 60s? Who knows?
Yeah, was it ironic? What was it, 2 or 3 weeks ago? I said, John, nobody talks about how low oil was. Remember, I think it was like $63, $64.
Yep.
So
right.
I mean, it's funny when it's down, nobody really says it. It's only when it goes up, everybody panics, exactly. Right?
Well, it's right to Aaron's point. Is what the consumer can feel, right? Yeah. The consumers had two problems in the last week. They're paying more at the pump, and they're seeing their 401ks and their investment accounts go down in value. Now those are starting to turn around. Consumers are going to feel good. They're going to pick up the phone and call Aaron Clark and say, "All right, I'm ready to go buy." And Dwight, I need that mortgage now. Yeah, you boys
we need to last longer than 30 days. It needs to be,
30 days. My goodness. How about 3 hours?
Yeah.
Lock now.
Yeah. That's right. Before any other X posts or True Social posts are made. My goodness.
But John, could you imagine, could you imagine though a hostile Iran with a nuclear capabilities? They would just, every time you'd make them mad, we're gonna bomb you, or you know what I'm saying? Sure. It would be uncertainty forever, type of thing.
I still have said all along, I don't think it's about the nuclear weapons. I think it's about oil. I really do. I think that is what I think is the driving force behind the U.S. doing what we've done. I really do. Think about it. You go to
Venezuela.
You go to Venezuela, you go to that. There's one island that no one's talking a lot about that's about 25 miles offshore of Iran. That is where all of this, not all, but a vast majority of the ships go right to. And it's an island, and it's old and it's archaic, but it pumps all the oil into those ships. There was talk yesterday, again, just chatter, that may be the first place that we're going to see boots on the ground, that we're going to take over that island and really, start to control everything. So if you got that, you got the Strait open through with naval escorts, et cetera. We'll see. But this president loves oil. It's the liquid gold that's out there. And I think the more you can control, the more you can kind of get your way. Because you think about it, Dwight and Aaron, real quickly, think about this. If we controlled Iran, if we controlled all that oil coming out of Iran, what's China going to do? They're going to pay us.
Yeah.
What's Russia going to do? They're going to pay us. They don't get a lot of oil from Iran, but they get enough. But China gets 90% of their oil. Can you imagine the smile on the president's face if Prime Minister Xi Jinping says, here's your $10 billion check. Notice there's no talk about tariffs or anything right now, right? Think about that. Mm-hmm. Tariffs have gone down the revenue scale and the level of imports. Oil prices are right at the top. So just my theory. We will see. Time will tell. I don't know how and if that would happen, but to me, it makes perfect logic sense. It's almost like Monopoly, right, Aaron? The old real estate, right? Yeah, I don't want 2 houses. I want that hotel on there because that's going to pay me a lot more. I don't want just a few 100,000 barrels. I want millions of barrels. He who has that is going to get paid a lot more. Yeah, we will see. It's an interesting topic, but we'll continue on. Tell you where those markets today, the mortgage rates, the bond yields, et cetera. When we return, let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Kristen, welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of OnQ Homes Mortgages and, of course, Aaron Clark of Edge Realty. Our topic again: will falling oil bring rate cuts and therefore a housing boom? We're going to delve into that shortly. All right, here's how we finished up. Again, wild ride up nearly 400 at our best level. I don't think we ever hit a 400 gain. I think we're real close. And then we gave a lot of it back, and then we clawed our way back almost unchanged for the day on the Dow side. 34-point losses, all which to me is a victory with everything going on. 47,706 was our close. NASDAQ a whopping 1-point gain, and the S&P negative 14. Oil prices, as I said, down $10.88 to $83.88 a barrel. Strong day for gold. $130, I wish. $130 rise, $5,242.50 an ounce. And Mr. Millard, 10-year Treasury, a big old goose egg for the day at a yield of 4.14. How did we do on the 30-year mortgage?
Well, here's the good news. I like to do the comparison. So last week, John, we got stuck in that 6.13 range. Today, we 6.0, 5 basis points improvement from yesterday. So at least we're on the downward trend till tomorrow, I guess. Then we'll figure out what tomorrow or maybe the futures are going to tell us, right? But
why do you think? What do you think with an unchanged day on the 10-year Treasury, but yet you lost 5 basis points on the 30-year. That doesn't happen very often. What are you seeing behind the scenes?
Not too well. I think there was an appetite for the mortgage-backed securities, but that faded at the end, John. We lost the mortgage-backed security market. Lost 22 basis points.
Okay.
If it carries over tomorrow, this will be back up to 6.13 tomorrow.
Okay.
But yeah, it moved. We opened up with a really good momentum, and then it faded. as you,
Okay.
just kind of like what you
kind
did.
of opposite of the stock market. Yeah. We started weak,
Yeah.
got strong. Yeah. Interesting. Yeah. I was trying to figure out the correlation there today. Let's not forget, speaking of tomorrow, we do have CPI come in our way. So that'll be a very important report. Retail level of inflation. Friday's the PCE, the personal consumption expenditure, which is the Fed's favorite measure of inflation. Not hearing anything out of the Fed right now. But, while we're on the subject of the Fed, guys, and again, this is kind of tying right into our subject today, is I've not seen anybody yet. I don't think anyone has the guts at this point, meaning major Wall Street firms, to come out and really up their projections as far as an interest rate cut yesterday. And I can't remember which firm it was, said, look, we're going to be lucky to get one cut, and it's probably going to be way down the road later in the year compared to before the conflict began, which was a cut in cut in June, and then another cut, somewhere later, maybe in the fall. But I'm not seeing any projections at this point, guys, as far as what that's doing. And again, I think so many analysts are coming out and they're saying the same thing we're saying. I mean, it doesn't matter how big or small or how smart or whatever. Everyone has the same opinion. No one has a clue where this whole thing's going, because how can you, right? How can you, when oil prices dictate what stock market's going to do, dictate what interest rates are going to do, and it all starts with what the president is feeling for that moment, what his comments are, and what's going on. Because we're not hearing anything as far as missiles flying anymore. He's really the one that's moving the market at this point.
When do you see, does the new chairman have to get appointed and confirmed?
When does Trump appointed him. Yep, that happened over the weekend.
Yeah. Okay.
I don't know when the Senate hearing confirmation is going to begin. I imagine they're going to try to fast track that as much as possible, because you are not hearing anything out of Jerome Powell or really anybody out of the Fed. So I've said this all along. I bet my bottom dollar that if it's not the day that he is sitting at Chairman Powell's desk, he's going to call a news conference and give a surprise 0.25% cut. Just right out of the gate. You got it.
All I know is we're getting our steak and lobster dinner from Dwight.
Yeah, that's right.
I'm not seeing 5 reductions this year.
We need to have one next week.
Yes.
To stay on track. Yeah. So John, what do you think? I mean, if that doesn't happen, then a June 17th is right after the May confirmation.
But Dwight, let's remind everybody though, buddy. Let's remind everybody, they don't have to have a meeting for the Fed to do anything.
Yeah, they could just do it.
That's my gut tells me, once again, the minute he's sitting at that desk and he's officially the Federal Reserve Chairman of the United States of America, he's going to go, hey, guess what, guys? Let's have a press conference. You know what? We just did an emergency rate cut because of the war in Iran, because of this, because he can find any reason in the world to do it. And as long as he gets the members to go along with him, then it's done.
Is it a majority? John, is it a majority he needs?
Yeah, they got to have the majority.
Okay. Do you really think that if he does that, though, it's going to have that big of an impact? I think it's going to go away the next
psychologically.
day.
Yeah, economically, no. A rate cut or rate increase means nothing to this market, as we know, because of the bond traders. But do you not think that Trump would want to set the stage after all the jabbing he's done against Powell?
Yeah, he's got to prove him wrong.
Lisa Cook, and he's got to prove him wrong. That's exactly right. I mean, there is no better opportunity. And once again, it'll really add fuel to the fire if we do start to see some inflation kick up or something between now and June. That'll be even more reason. So he can find any reasons, or he can just say, we're doing it because we're doing it. And who's going to argue? So that's my prediction. So we will see what happens there. Want to quickly, before we take our break, I want to mention Oracle. They had a release after the close, and man, they had some great numbers. Stock is really moving. Finished the regular session down $2.16, 1.43% loss to 149.40. Right now in the after hours, it's up $11.30, 7.56% gain to 160.70. All right, when we come back, we'll follow in oil, bring rate cuts, and a housing boom. The boys will chime in on this one when we return. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of On Q Home Loans, and of course, Aaron Clark of Edge Realty. Once again, a wild ride today. Finished down 34. That's it. NASDAQ rose 1, S&P down 15 for the day. Time we move into our topic. Will falling oil rate cuts result in a housing boom? Let's go back to what we went over on Thursday, because this is really important that you somewhat understand the cycle of how oil can influence the real estate side of things. Then we're going to get into some great details for you. So remember what we covered last week, guys, and that was really, really a great show in my opinion, because it's so simple. When oil rises, our transportation costs go up, meaning our groceries, everything goes up. Manufacturing costs increases, everything goes up. What does that create? That creates inflation. What is the number one reason the Fed will not cut interest rates? High inflation. That's right. So now here we are. Hence why we have now switched our topic from last week of, we have basically zero chance with what these oil prices are doing of the Fed giving us an interest rate cut, to say, wait a minute here, this thing has turned around awfully quick. Maybe those cuts are in the horizon. So obviously it's just the opposite scenario. Falling oil prices reduce inflation, because remember, inflation is CPI that we're going to get tomorrow. Between 4 to 6% of that calculation of the CPI are oil prices. Now, just as a reminder, tomorrow's report is going to be February's report. Nothing that we have seen these last 2 weeks is going to be reflective in that CPI report. That obviously will come in March's number, if it even comes at all. It just depends upon, if this little blip, if we start going back to $70, $80 oil, you're not going to see anything in there. So, but just want to set the table straight on that. So, falling oil prices can push mortgage rates lower because inflation expectations decline. All right, it's really that simple. So we already touched on, could the Fed cut rates in June? Well, again, they absolutely can. Dwight, I want to take this opportunity for those that may be new to the show, or maybe they're young listeners, they've never bought mortgages. Break this misconception real quickly that the Fed does not set mortgage rates. How are mortgage rates determined? And why? Because we talk a lot about the Fed mortgage rates, but they're really apples and oranges.
Yeah, it goes back to basic law of economics, supply and demand. So you're actually got investors, traders buying mortgage-backed securities and or treasuries in their portfolios, massive amounts that you've described. That's what actually drives the mortgage rates down, is the appetite to hold or to purchase more of those type of securities, mortgage-backed or treasuries. And so whatever the Feds is kind of just maybe a little indicator of kind of what they're thinking.
The barometer.
Yeah, but we brought this up many times. When the Feds drop rates, what do the interest rates normally do on mortgages? They go up.
They've been going up, yeah.
Right. So the bond traders didn't like that, or the mortgage-backed securities didn't like that.
And that's the point we want to get across.
Yeah.
It is the bond traders, folks, that determine mortgage rates. It's not the Fed, right? Big misconception always. It is the bond traders. And Dwight, what makes those bond traders either buy bonds, driving the yields down, or sell bonds, driving the yields up?
Inflation.
You got it. And economic activity, and a million other indicators of, if they got up on the wrong side of the bed that day. There's a million different things that the bond traders can do, but they are the ones that are going to determine housing boom, bust, mortgage rate decline, mortgage rate increase, not the Fed.
Yeah. Okay? Well, and John, to your point on the inflation, we just go back 11 days earlier. Remember we talked about, touted we were inside of 5.99. Yes, it didn't take but 2 or 3 days later, once that uncertainty and the oil and all that, to push us to 6.13. That was almost a 15 basis point increase in rate, not cost, but in rate in 4 days, 5 days.
Yep.
So very sensitive, very sensitive.
Very, very sensitive. Everything is sensitive nowadays.
Yeah.
Okay, Mr. Clark, let's bring you into the fold of the conversation at this point. Tell us what happens when lower interest rates happen. Let me rephrase that. Lower mortgage rates happen. And your opinion now that we're in this new world, at least at this moment, would these lower rates help the buyer, meaning bringing a big surge in new home buying and existing home buying opportunities? Or could all those people out there that have been waiting, go, oh my God, that house that I looked at, in, let's see, what's today, March 10th, that house I looked at in mid-March, now let's say it's April, is now gone up 50,000 because rates are lower, or you see my example here. So tell the audience what happens now as far as home prices.
Immediate response, you're going to see probably more of the boom side of buyers being able to now afford some more stuff that they've been wanting, because they meet with Dwight and his algorithm approves them, and then they have a number, and everyone wants more than what they can afford, right? Like that's kind of the bottom prediction of what people want. So with all this stuff happening, he's got to call him the next week and go, hey, sorry, but your pre-approval was based on X, and now we're higher than that, so that brings your purchase price down. So rates coming back down is going to increase their purchase price availability, but not so much so that we're going to see huge dramatic reactions in pricing. We need a lot more buyers entering the market for that to happen. So remember, basic economics, supply and demand, right? So right now our supply and demand is pretty equal to what's happening and how many buyers are out there purchasing. If we were to get substantial rate cuts, it would put us in, we've talked about, 5.5% or 5%. You're going to have so many buyers entering the market that if the supply doesn't increase, then absolutely you're going to see housing prices go up 50 grand or 100 grand. However, I believe, and a lot of other people agree with me on this, that we also have a lot of pent up sellers that are in those 3%, 4% rates that
Mm-hmm.
right now they're going, I can't buy anything or get out of this or let this thing go because I'll be in a 6% rate. That doesn't make sense for me right now. If we get into that 5% number, we might see those people break loose, which would then increase inventory. And you might see housing prices increase a little bit overall. But if the supply increases with the demand as well, then, I mean, there's going to be some good buying opportunity for people.
So let's do a little poll between the three of us.
Yeah.
Okay. I'm going to start with myself. And here's the question. With the clients you know or have known or have dealt with that have this 2 to 4% 30-year mortgage, what percent do you think, to your point, Aaron, if rates drop to, let's be real aggressive here, 5.5%, would actually give up that 2, 3, or 4% mortgage? Or so what percent? Or would they possibly look at renting that house and just going on to the new one? So I will tell you, I'll start the poll here. Every client that I know of that has that mortgage in that range, 2 to 4%, not one single one of them. Now, I'm going to give you a little caveat here. You got to remember, my clients are in or near retirement, so a little bit different life cycle than a young family. Yeah, exactly. Not one person has ever told me, look, at rates drop to 5.5, I'm out. I'm going to give up that low mortgage and I'm going to go buy something else. Every one of them just like, I'm going nowhere. Or I'd say maybe 5 to 10% have said, can we turn it into a rental? So that's just my world. Let's start with you, Aaron.
I mean, man, we could do a whole show just on this, honestly. But I think
Yes.
that our culture is moving so strongly right now and switching directions so quickly that the younger generation who got into the housing market in the last 5 to 10 years, they see opportunity and change as something that they desire. And with that rate being really low, they can't do it because it wouldn't make financial sense. If our rates come down, I think, yes, they'll let it go in a heartbeat because in their mind, they're going, I can change the trajectory of everything and do this next business adventure idea or whatever. And I'm going to increase payment by, I don't know, $500 a month, but I'm going to pay all these other things off. I think they're looking for that quick move so that they can move on to the next thing.
More of a business move than an emotional
Yeah, I
move.
think it's more of a business move. I think it's like right now for somebody to do it, even at 5%, I think is going to be more necessity. Like, oops, I made some bad financial decisions and I need to fix them. If we get in that 5, 4, high fours, whatever percentage, I think you're going to see more people that are going to do it out of desire to expand their kingdom, if you will.
Yeah, I mean, I can't see anything better than 5.5 over the
No,
next
no,
couple
no.
years.
I mean, just to exaggerate the point. Yeah, for sure.
Yeah, exactly. Dwight, I need to have you hold your poll answer here for a second. Let's get this break wrapped up with Kristen Snow in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk KOH. We've been talking with Dwight and with Aaron about, again, falling oil. If it happens, will it bring rate cuts, which will then result in a real estate boom? First, let's get some phone numbers going, boys. Dwight, you're up.
Yeah.
Thank you, sir. Mr. Clark.
673-6700.
Thank you, sir. Okay, Dwight, back to our polling question. Give me the answer.
So my best, here's what, and I'm going to caveat it. I think the sweetest spot you could find is about a 5.25 30-year fix. The reason why I say that is these sellers and builders are getting very fatigued on these incentives. They're paying a lot of money to incentivize the buyer to actually now take the lower rate. You get somewhere to 5.25, they don't have to come up with as much money, probably less than half of what they're paying now, to get in the fours, which then I think psychologically you get 4.99, 4.875, you're going to feel like you won. And it's all about the perception. If you feel like you won, then I think that'll happen. So I think if you can get somewhere and that's going to take a little bit of a push to get there, then I think, to Aaron's point, maybe some of these people that, for life changes, they need a bigger house, they need this, they've got equity. Everybody's salivating over this equity, right? They've got it. They just, how do I get it? Well, one of the ways is to move around. So if you can get a little bit more product on the street, for Aaron, I think you'll see, maybe a better balance.
Well, let's let the audience have a little insight into our conversation during the breaks. I wish we could have been recording that because we were talking about that where, once again, it's very difficult. Aaron, you brought up some excellent points. I'll call it the middle-aged family, right? Maybe they're in that first home. They got maybe 100 or 2,000 equity. The family's growing or they just want to move up, all right? They're making more in their jobs, their business, etc. but they can't get that second home without selling the first. They don't have enough cash to be able to put down a substantial or even a decent down payment because the existing prices of new homes are so high. They need every dime they can to get out of that house. And so forget about the mortgage side of it. Your point is it really comes down to they've got to free up that equity. And so if they can't do that, you and I were saying, look at we can say all day long we can have 4% mortgages, but if there's no inventory, what good does it do, right? So where's this inventory going to come from if those with those low 2, 3, 4% mortgages are not moving? We know the retirees probably aren't going to do it. That's a big majority of them. I would love to see a stat on that. I have to look that up. How many 2, 3, 4% mortgages are owned by the baby boomers in the country, right? That'd be an interesting one to tell us if we're ever going to see any reduction in or increase in inventory. Yeah. Chime in on that point, Aaron.
I mean, I think you're going to see more of a wash scenario if you were to have something like that happen, because those young families coming in that bought, whatever they could afford at the time, they have some equity and they're going to buy up. Well, then they're going to have to sell that home. So you're going to bring a whole new level of new buyer that comes into the market. So you're going to see a wash in that arena. I think people that have investment properties and things like that, and they've got those low rates, that's going to be the dam in the market that holds up inventory. Because why would you ever let that go? Like we were talking about on the break. I mean, to buy an investment property right now, if you're not putting a substantial amount of cash down and you're borrowing a lot, you're taking a negative hit every month. I mean, there's no doubt about it with the current pricing that we're at. So if you already have something that it might be in that same pricing category, but it's at a 2.5% or 2.3 or 3% rate, then you're still positive on your cash flow with today's current market rent. So you either need rents to increase significantly, rates to decrease significantly, or housing prices to decrease for that to all work itself out. So they're not going to get rid of those investment properties.
You need a perfect storm in a good sense.
Yeah. You need a COVID on that one. You need a COVID number 2.
There you go. No, don't say that.
I don't want it, but that's the kind of like blindside you need to cause the market to get really shaken up.
That's what we call the black swan event. Yeah, Clark. That's what we call the black swan event. Dwight and I have lived through
Right now we're at the black whale event.
The black whale event.
Yeah.
Yes, exactly. Dwight, what's your final advice right now? I know it's probably lock it in, right?
Yeah. I think if you like it, you lock it in. And to Aaron's point, a wash doesn't help us. So keep an eye on the market. Listen to this show. Get some good ideas, and just keep pushing forward. I mean, don't give up. There's no reason to give up. So. Yeah.
Aaron, 10 seconds, wrap it up.
Yeah. I mean, if you're shopping and you can afford stuff and you're ready to buy, do it, because when rates do come down, you can refinance that loan and make it even more comfortable. But don't stretch. Exactly. You don't have to.
Yeah, there you go. I love that advice. Great job, fellas. That was a lot of fun talking about oil, mortgage rates, and housing prices. Who'd have ever thought all three would be in the same sentence, but that's the world we live in. Take care, boys. We'll see everybody tomorrow. God bless.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.